All right, hello and welcome everyone to this live intraday scalping webinar on SB Trade Desk. Good to be with you this morning. So, there's a lot of stuff to cover. We did just get, by the way, the print for initial jobless claims for the United States coming out a little bit better than expected. 265 versus 300. Continuing claims a tad lower, also a 24 versus 23 here. So not a major market mover, especially for the dollar heading ahead of tomorrow's major event risk, which is obviously going to be those advanced read for the fourth quarter GDP numbers, which will be released tomorrow morning. As far as economic data is concerned for the rest of the session, you got pending home sales here at 10, but then you're pretty quiet until the overnight session with some CPI figures out of Japan. So that's what's on tap or on dock for the next few days here. Okay, Mark Lavender, good morning. Great to see you. Pooja, great to see you as well. Brian, the whole gang's here, guys. So good to be with you. Some note here from Eileen saying, good morning, Michael. Your Sterling Oz is not for the faint at heart. Jumped in a bit last night for a few pips short. Jumped in a bit this morning for a few pips long, and I mean few, quote unquote. All right, so well done, Eileen. I hope those worked out for you. Listen, as far as the Aussie crosses are concerned, Sterling Aussie last night actually turned out to be one of the strongest performers. You know, the positioning of the trade was essentially an opening range trade at its face value. That's all it was. The opening range for the month was for the week rather, was taking place just below key resistance. And when those setups break, guys, when those opening ranges give out, you know, typically you'll get an extended run like we did last night. So we'll take a look at Sterling Oz for sure. We'll take a look at some of the other crosses. Kiwi Yen, you have on the screen right here, is actually coming into a very interesting area of support as well. We've been favoring the short side of this trade, but at that point, you want to be, or at this point rather, you want to be a little cautious, okay, as we head into that trend line support. Again, this dates back to the 2013 August low. So I'm a little cautious here. You also have the lower median line parallel from the decline off the December highs and a 764 retracement. In fact, if we make this 764 a 786, I'd wonder if it hits the lows. Yep, right on. We'll extend this just a tad lower. All right. So this is sort of the focus that I put out on SB yesterday. And, you know, at this point, from a scalping standpoint, you really don't want to be pressing additional shorts from here. If we see a downside break, again, this is like the inverse of Sterling Oz, meaning if you see this downside break, you're likely to get the same type of price action that you saw in Sterling Oz last night. So in such a case or in such a scenario, you're basically looking for a move into 84.55, a little bit more of a key support region down here. That said, near-term exhaustion here, or at least the downside from a scalping perspective, needs to be cautious above 85.60. All right. Now, if momentum breaks into the oversold condition overnight, then it's free for all. You know, this thing can stay overbought for days, weeks, months. Same thing on the oversold condition. And if that does materialize, then watch for that break below 85.60 to open up those subsequent targets. Here's what we looked at last night with Sterling Key. So here was this chart. And again, I mean, it's a basic support region that you do not want to ignore. Not only on account of the fib action that we're at, lower median line parallel, the 2013 trend line support, but also just look previous price action. The biggest tell in indicators, the biggest tell in price action is always going to be previous price action, to see what, you know, price did at a specific level, to see how an indicator reacted when price was doing that. And if we look at this region, well, the August lows was a spike low into that. The May lows was also a spike low into that. So at risk while within this region, but inevitably a downside break, you'll be looking to play the subsequent target. So the scalp didn't really do much since last night's report. There's no plays on this one. The opening range clearly broke here. This was on the back of the RBNZ interest rate decision. Obviously, they did hold rates. And Wheeler, I mean, you got to give the guy credit. He's as smooth a cat as they come. And he says that they're prepared to raise rates or cut rates as needed, right? Talk about playing both sides of the coin there. So not much in the way of new information provided from the RBNZ. That being said, we're still focused on this same scalp setup. So as far as the intraday chart, you have a very clear picture of what the daily chart is reflecting of this being a near-term key support. Here's what the intraday chart looks like for Kiwi Yen. All right. So while last night we didn't quite, where are you? There you are. We didn't quite make it into the support target. I noted you were still waiting for that drop into 85, 84, 85 to 72 is going to be also that target, which was there was something in there at 85, 72, if I recall. In any event, this was the support target that we were looking for, and here we are. We just missed it on that run last night, and we finally dribbled into it here today. Okay, obviously you're getting some divergence into the lows here as well that you want to be mindful of near term. So I'd actually be inclined to see if you get some sort of long trigger. If you get a compelling long side trigger, which I don't see anything panning out per se right now in the 30-minute, it might be worth a shot to actually play a little bit of a rebound here. Now, I wouldn't be looking to get too aggressive on it. And again, we're not trying to call a low because, the daily chart looks like it's breaking into oversold territory on the momentum. And if that's the case, I don't want to fight it. But at the end of the day, if we do get a recovery or a near-term rebound off this level, long scalps into 86.26 or even 86.65 would actually be well suited here before the breakdown. As a disclaimer, I don't have anything on this trade. I missed that entry yesterday in RBNZ. Kind of kicking myself, but that the swing trades were still involved in the Kiwi, so more power to you. Hey, Gert, great to see you in the room, sir. Okay, so that's the Kiwi Yen. Ever since that drop last night, kind of lackluster. The range is still there. You got 33 pips as a quarter every daily ATR, so keep that in mind. Not my most active trade this week, but certainly the levels are still good. Downside break beyond this region, you're looking for 85. You're looking for 84.55. Any questions on that Kiwi Yen trade before we move on? Obviously, we want to get into the meaty Sterling Oz, which Eileen was talking about. We'll jump into that in just a moment. All right. Sterling Oz. That was featured on Daily FX yesterday. Here's the link. If you haven't seen it, okay, and the premise here was exactly the same as the Kiwi Yen. Okay, you opened up the week at support with an opening range sitting at that support structure. These are my favorite plays, and these are the plays when you get the break, you get those shots, you get those extended 100, 200 pip runs. So for the Kiwi Yen, you came into support early in the week, you sat there for the entire week, the break happened on an event risk, which sometimes will just serve as a catalyst for the move. The break, again, below the weekly opening range, giving us a downside bias heading towards the end of the week. Sterling Oz started off the week the same exact way. Okay, here's what the daily chart looked like. Ahead of this candle, obviously, you're opening up the week. Here's Monday. You're opening up the week on a Monday-Tuesday stretch into a nice resistance level. This is the 2014 high day close, HDC. Okay, it's also a 38.2 retracement from the decline off the 2008 highs. And it's also the swing high from January of last year. So right off the bat, you're looking at this with some contention where our bias has been constructive. In fact, look, since the last low we made in September, I noted this in the video, every subsequent pullback in the pair has found clear support at 40, 60 break, clear support at 40, 60 break. And at this point, the trade was, look, if the opening range to the week breaks to the downside, let's look to play this correction, okay, into major key support again, into the lower median line parallel. If the opening range breaks to the upside, more power to you. You're looking for the 193.25 level, you're looking for 195, and that's the current target on the upside. So here's what the scalp looked like. It panned out perfectly, guys, and I'll show you some triggers that actually panned out really well in the 5 minutes as well. Here's your Sunday open. I don't know if you can see that at home, but all my charts will have a vertical line for the weekly open. You came back, you filled that gap, you made an opening range low at 89.38. We pressed that low into 89.20. I noted that yesterday as well, and that was the invalidation level. And when we're looking at these trades, guys, where what we think, I'm trying to put this in terms that makes a little more sense for you. So the premise of the trade coming into the week was the opening range at resistance, right? I'm not going to lie to you. I thought the opening range was going to break to the downside, right? Give us a little bit of recovery. It's been a sure clean shot to the upside. You know, you've had a 4-day extended rally. Maybe you get that downside break. Who knows? But that's why we use tools like the opening range, guys, to give us that push. What I think doesn't matter. What I think is going to happen doesn't matter. It's what the technicals are saying. And at this point, we had no validation in calling this a high. I had no reason to start pressing shorts on here except to play the range, of course. But I had no reason of validating or targeting anything sub the opening range high, or the opening range low, rather. The momentum signature didn't give us anything since the start of the week. In fact, here's a 40 bounce. You probed above 60, but then you probed right below 40. So right off the bat, you're not going to be able to use those sort of tells in momentum for what's going on. The momentum break on the 30-minute wasn't quite as clear, okay, right off the bat because of this slope. Don't like to see that break. I like that break to be something a little bit more sudden. So if you missed the initial entry here on the pullback, momentum or price checks the opening range high for the week again and moves off. Momentum checks that former resistance trigger and moves off. So even if you miss the initial break, it's this pullback that offers you, that secondary way to get in. For the Sterling Oz on the 5-minute, which is what we're actually looking for when we're executing these trades, trade by trade, looks like this. Okay, and here are the triggers that we were looking at. So the initial trigger for the break that took you above the opening range high for the week happened at 2,300. Here's what 2,300 looks like. Okay, you did get that break early. Price didn't break that high. This is a non-operative trigger, but it comes back, tests it as support. The subsequent break above 60 made the break in price above the opening range high. Again, if you missed this initial rally, no problem. You got the pullback to test the opening range high again. Momentum gave you another trigger. Again, it doesn't matter that this dribbled below 40 because, guys, you're above the weekly opening range. So as long as you stay above 92, you're looking to buy pullbacks. And this was the best pullback you can get in. Okay, a stop here against the opening range low for Asia Pac, which basically was right here, 91.60. More than enough room. 40 pip stop. Remember, you're looking for 60 pips almost per scalp. Really wide quarterly ATR. So Eileen, talking about the faint, this is a trade that's not faint of heart. Always, you want to make sure that you're always taking a quick glimpse of what you should be expecting as far as the range is concerned. And if you're seeing my chart with a 25 pip quarter ATR showing 60 pips, that's what you better be ready to both put on the table, and that's also what you better be ready to book profits at. So the actual entries, both of them, if you had missed the first one, the second one even, did pan out pretty well. The risk to reward was well suited, and you have well over the 60 pip threshold that you're looking per scalp at this point. Okay. If you're still holding positions, you want to be bringing that in to break even. I definitely would have taken some off the table at the 60 pip threshold. 95 is really just a soft target, guys. The main feature you're looking for is the upper median line parallel. It's clear to see here in the daily chart, and that's well above 96 even. Okay, so there is some room. The 95 handle, like I said, is just a soft target, big figure. Sometimes you'll see this thing pause, but as we noted on that piece yesterday, these types of breaks, if we broke through the 2014 high, likely to see an extended topside advance for the pair, and that's exactly what we got. There's a typo there. Just noticed it. Okay. Fuel extended topside advances for the pair. So we'll look to see this pair, especially heading into next week, will be very interesting as we go into the to the RBA and the BOE. So we get interest rate decisions from both of them next week, which I think could have a larger impact here on the Sterling Oz. In general, I'm starting to favor a little bit more of a constructive approach on the pound and abroad. But certainly this pair, in and of itself, with the opening range where it was to start off the week, was a very, very clear and nice trigger on the break for the actual long exposure. So Eileen says, would you watch for more long entries at this point on Sterling Oz? Possibly, Eileen, heading into the end of the week, possibly. I don't. Let me take a step back. The entries, I was listening to Jamie's webinar when he was talking to you guys yesterday. And I have to agree with him 100%. I want to reiterate one other thing. Guys, your best defense in these types of markets, specifically even more so than swing trades, in this type of near-term trading strategy is your entry. Your best risk management is a proper entry because that gives you the better risk to reward. It gives you a more definable risk tolerance, right? Because you know exactly where that trade idea is invalidated. And we really have to pick those entries as as meticulously as we can. So Eileen, at this point, yeah, if it comes into 92.20, 93.27, 93.05, this region, and we find a clear cut bounce above 40 or a momentum trigger to the upside, sure, it might be worth a shot. In fact, keep in mind you also have the former upper median line parallel. We could be breaking this, checking it as support, then you look higher, sure, right? But again, I can't tell you I'm going to do that when price gets here because I need to see what momentum is doing. I need to see where we are in the grand scheme of things. Objectively, Eileen, aside from my opinion whatsoever, you stay constructive above 91.95 as per the opening range strategy for the week. Okay, so remember, you set a Monday, Tuesday high. You wait for a break of that. A break of this high puts you constructive against this low. This is the only thing that invalidates the long position. And even if you get a pullback here, if we don't get a trigger, a momentum trigger or a turnaround at this threshold, we'll look possibly for another entry back at 92 here. Does that make sense? Okay, sounds right. Thanks. You got it. You got it. All right. Any questions on Sterling Oz before we move on to our other setups? I'll touch about dollar yen really quick. For those of you who were in the FOMC interest rate decision yesterday, it actually panned out. Remember, we were looking at the opening range break for the U.S. Session. Target to the downside was 117.35 on that break, and it was a tight target, but it did run right into it. So here's what dollar yen looked like yesterday. Excuse me, as we came into the FOMC. Right, the U.S. opening range was very clear-cut and simple. We had noted that a failure to push through the opening range high and a reversal really put the emphasis on the downside for the near term, just on account of the session opening range, guys, for just the U.S. session. So it was very jackknifed, and guys, it didn't really get a full extension. So unless you got a really good entry on this, you didn't quite get that 30 pip ATR. The move was, 40 pips. But I doubt that you would have gotten entry right at that break. So in general, the opening range low held. And this is something I just wanted to note upon. Even if you were trading this with me yesterday, guys, on the FOMC release, even if we took that short, okay, your scalps, and I said this earlier in the week, your scalps should never target something outside of the weekly range unless it's been broken. Okay, so for example, if the week, let's just erase everything from here. If the week had started here and this was the opening range low, right, and I took a short from here, I can't target anything beyond this opening range low for the week. Once we've made that break, great. Now I'll be able to leave that short open looking for that extended push. But as long as the initial opening range is intact, all your scalps are within this universe right here. Once that breaks, now you start to fade out, start to scale out of a position, bring your stops down, etc. But as long as the opening range is intact for the week, you want to make sure all your scalps are in and out within the given range. So, you would have gotten a nice pullback right here into the opening range that held the exact low, by the way. It was like a quarter of a pip off, I think, 124.9, one of them was 125. But at the end of the day, that's still your initial opening range that you made just on the Monday, Tuesday stretch. Not surprising, right? This thing has just been in consolidation, playing the same range over and over again. And we were really heavy on it last week. I was really, really heavy, especially on the short side on both of those attempts to break into 118.80. This week, I've only taken a couple positions on it. One of them I got shaken out a little early. So, in general, respect this range until we get the break. Okay, respect this range until we get the break. The daily chart doesn't really instill much confidence in a broader directional bias from here. Do you know what I mean? We're still in consolidation. Until we break this godforsaken range, you want to make sure you're respecting these levels. I am under the my expectations, let's just say that, are for one rip higher, possibly into 118.90, then a reversal to check 116 or 116.50 on the intraday chart is a level there as well. That's just my expectation. That's just my conjecture. I don't really know if that's going to pan out. And that's why on a near-term approach, when we're scalping this, you really just need to take it on a week-to-week basis. And that's why the weekly opening range, the session opening ranges, are going to be your best friends in a market like this. Pooja, thanks for letting me know that. We tried a different setup yesterday with Jamie's webinar on the transfer for the FOMC. So thanks for letting me know that. She says the webinar started off well, but the delay started increasing. By the time you came on, the voice was cracking, and finally I logged off and couldn't get in. Okay, guys, did anyone else have problems like that yesterday? Please, info@sbtradedesk.com. Guys, leave that email on the tip of your tongue. Anytime you have any issues, reach out to us. I'd be more than happy. I want to know what's going on, and if there's any issues like that we can address now before, the full launch. So Jay says it was no problems. Gert says it was all fine on my end. All right. Well, Pooja, thanks for letting me know. In general, guys, keep us informed. We're very accessible, myself and Jamie, and more than happy to tweak whatever tweaks we need to do now. Missed the FOMC live, but listened to it last night, and the recording was all great. All right, Eileen, thanks for that. Pooja, thanks for the information. Keep me updated, okay? Mike, do you know when IDO starts on the site? So IDO, guys, a quick update on the IDO search engine. They're currently building out their version or their portion of the SB Trade Desk site. So we have a preliminary launch, soft launch for March. I know it got pushed back, guys. Obviously, you guys know what's been going on with everything that's been sort of up in the air right now. So we will have that, God willing, by March. The pricing is still going to be debatable, or the pricing is still being negotiated, so I really don't know what the actual end user price will be. The end user price at the beginning of the negotiations were $150 in addition. Remember, guys, IDO Search, they sell these subscriptions to institutional desks for tens and tens of thousands of dollars on a yearly basis. So the fact that we're able to even wiggle in and finagle an individual user license for retail traders is pretty exceptional. Okay, so I will get back to you with the final numbers and the final launch date. Brian saying what kind of research did they do? So they are pure technical guys, and the engine that they've built has been tweaked to be able to identify recurring patterns. So guys, for example, you can take any portion of the site. You can just circle anything in the site and say, okay, when's the last time I saw a pattern like this? And it'll come back with a readout of the last how many times you've seen that pattern over the X amount of years, how many times we're winners, how many times we're losers, percent gain, and percent loss. So at any point, we don't have this on intraday data yet, but on the daily charts, at any point, we can always just take a quick look at a region or a defined pattern and do a scan to see when's the last time we saw this type of recurring pattern price action. It's absolutely phenomenal stuff. It was actually originally built to sequence the human genome. So the application of this to markets has really been something that has been, at least for me, it's just amazing stuff. So looking forward, really excited to bring that on board. We will, Jamie and myself will be providing additional research for that as well. It's going to be an add-on to the subscription, guys, but again, I will get you more information on that when it comes. For those of you who do have a JS Trade Desk loyalty discount, we will take that into consideration. We'll be providing you with an additional coupon code as well. Will a short trial be available, Leon? I don't think so. Guys, we're not going to have any flexibility. Myself and Jamie aren't going to have any flexibility with the pricing on IDO or offering, trial versions or anything. This is a standalone firm that we've been able to affiliate with, so it's going to be its own little thing there. Leon says, is it month to month? Yeah, it's always month to month. You guys can sign up for it and check it out. For any reason, if you want to go back to the original subscription, to the basic SB Trade Desk subscription, you can do that. Free, whatever you guys want to do. Is there a downloadable app you can add to our machines? No, Brian, they're not going to make that available. The downloadable softwares that they offer, again, are for institutional clients and cost tens of thousands of dollars. So unfortunately, we're not going to have access to a downloadable app. However, the web version will be fully functional. So it'll be doing everything pretty much that the downloadable one does to a degree. Okay? Brian says, right, cool, right on. Stefan just joined. What's IDO? It's an add-on, guys. There's information about it on this site. I don't want to spend too much time here talking about it. I want to jump back into the trades. But we'll give you more information on that as that launch comes into focus. Yeah, Leon, for sure. Me and Jamie will be doing presentations on how to use it. We'll be showing you live webinars on what the search engine looks like. We'll be making a video on the actual features of it. So there's a lot down the pipeline, guys. No worries. But as always, your feedback is invaluable, guys. So please do feel free to throw that out for us. Eileen says, what will be the IDO benefit? And okay, you answered it. Thanks. More than welcome. More than welcome. All right. So back to the markets. We covered dollar yen. Okay. Where are we? We covered dollar yen. We covered sterling Oz. Aussie CAD. So we noted yesterday the failure to close above the 99.61 resistance does look like it's going to turn over. Unfortunately, I didn't have enough conviction on this one just based on what we were seeing in price action when we headed out of the office here yesterday. Obviously, the break below the ascending pitchfork formation off of that low that we made for the last week, I guess it was, or the 25th. It was this week. Obviously, that puts you on the short side. There was a clear trigger that took you below 40 as well. Your downside targets would have been 98.40 and a move right here into the essentially 98.07, 98 handle. So it actually panned out all right. It actually panned out all right on Aussie CAD. Okay, so the break here has coincided with this a 40 break in momentum. In fact, if I bring up an intraday chart, there was a trigger there as well for Aussie CAD. And that was right here. Okay, so this was the exact trigger that would have put you on the short side right around 3 a.m. here in New York as we broke back below this trendline resistance from last week's high. Okay, so the 30-minute chart giving you a break in momentum. Obviously, this is what you're going to be focused on first. Okay. We've held below, since the high that we made, we've held below 60 on the 5-minute chart even. Okay, here's the other 60 hold. 4 tags of support. The break there, bearish against the session highs, would have given you ample room here. Okay, initial targets, like I said, 98.07, and then the weekly low is here. This is where I would have been out. Again, I didn't take this position. A lot of these trades, guys, have been panning out real late here in New York. I mean, this is, right into the entry ahead of the open of Europe. This is like midday in Asia. So for those of you who are trading those time frames, you guys have really been getting the cream of the crop, the cream of the crop as far as the scalps are concerned. Again, it was a readily identifiable trade here. So here's another momentum trigger. This is going to take you out of the shorts exposure if you're holding any shorts from this standpoint. At the end of the day, this was the opening range low for the week. Okay, so if we stay below this, you're still looking at an extended push into 97.40 and subsequent 96.80. If we break back above this and we don't close the week here, you want to respect the opening range for the week, which we continue to trade within. But nice play there on the drop. Nice play there on the drop. Again, most of this propagated by some of the Aussie weakness that we're seeing, but nonetheless, the triggers were there. Any questions on the Aussie CAD? Not quite as big of a range as Sterling CAD, or Sterling Oz rather, but nice sizable 30 pips still works for me. DB says I positioned short in Kiwi CAD. As it as it's a nicer looking Head and Shoulders top pattern, shorted at 92.85. Great entry. Great entry. Let's see what this looks like. As you can see here, I don't really follow this one too closely. Let's see what it looks like on the intraday. Kiwi CAD. Kiwi CAD, okay. Okay, here's your weekly opening range. Well, all right. So this, on and of itself, was actually an exact opening range play, just like the Sterling Oz, or Kiwi Yen, rather, I guess. It was an expanding range. So, in fact, every high was a little bit higher, every low was a little bit lower. That's the subsequent break that you would have used to validate that. But let me take a quick look back here, DB, and see if our levels are still effective. Sure. Not bad. Not bad at all. In fact, that high that we made was an exact 16.8 extension off the low. Do you guys see that? You can't make this stuff up. 94.01. We did stretch right into 94.30 on one day there, but really nice hold. Really nice hold. Okay, let's clean this up, guys, and we'll see if we can get DB some fresh levels on this. Also, that 786, we're going to go ahead and drop that down to, no, we'll leave it at 786. Get rid of that 618. That's spent. That's spent. Get rid of some of these trend lines, clean this up a little bit more tidy. All right. So you have the retracement of the high, you got that level. You got an extension off the low, which actually caught the high. You have a formation of which I'm not crazy about. Yeah, I think I tried this before. I'm just not crazy about this in general. If we mirror that parallel, okay, let's see if we can get, okay, we're just going to connect it to there and see if that offers any plays on a downside break. Obviously, your retracement of the advance is warranted here now that you've made a topping process. I love the entry that you have there, DB, for sure. Okay, so you have that confluence right here, which I'm going to leave that because it's interesting at this point. Delete that. The 50 is a nice pivot. The 618, very nice pivot. This 618 extension, kind of messy at this point, so we'll get rid of that. 786, we'll go ahead and leave that there. We'll bring up an 88.6, and we'll clean up that 618. All right, so these are the amended levels I'd be working with on a Sterling, on a Kiwi CAD, pullback. Right now, I do have us at support, so I would just bring that up to you real quick. And that level is basically defined by this 91.20, 91.30 confluence. There's nothing in previous price action that is really alarming yet, but it is going to be a basic 38.2 off the low and that 100% extension from the advance as well. So on that premise alone, I've been watching for support in this region heading into that lower median line parallel. Sort of little shaded range there that I'd use caution of. All right, that basically takes you as low as 90.80. Again, 91.20, 91.30 is going to be the actual overlap there. Stefan, newbie question, what is theory for placing stops? Ooh, Stefan, that is a newbie question. No problems. You're in the right place. Listen, stops are not optional. In any strategy, I don't care what you're doing. I don't care what type of time frame you're looking at. Don't care what kind of leverage you're using. A stop is non-negotiable. Okay, so for us here on an intraday type of strategy, you're not necessarily working with a 3-to-1 stop. You're not necessarily working with a 4-to-1 ratio. In fact, if you look at swing trades, we're up about 1,000 pips so far for the month with a much, almost double the amount of losers that we have winners. But a risk-reward ratio that is a multiple like that, that's the objective. For us, intraday, when we're placing 4, 10, 15 trades a day, your stop can never be, it has to be at least 1-to-1 or better. A lot of times, guys, we're going to improve that as much as we can. So, for example, if we take initial entry, it hits our first target, we take some off the table, stops are brought down to break even, that's a trade that's going to end up being a much more than 1-to-1 risk reward, right? And you're always going to try to adjust your targets as the trade pans out to eliminate that risk, that downside turn. But, there can be no negotiation with that, guys. If you're jumping into any position without a stop, you might as well have been long Euro Swiss, okay? So I'll leave it at that. Okay, Kevin, yeah, gold. A lot of people are looking at gold. Any more questions on Kiwi CAD? DB, take a look at this region here. If price starts to stall, maybe start to clean that up a little bit. But I do like the broader trade. I think you finally get into 90.30 at some point, but near-term support, I'd be watching that lower median line parallel. Stefan says, got it, Donka. Cheers, mate. Anytime. All right, Kevin, let's take a look at gold. This is what I want to show you on gold. Guys, where is the weekly? Oh, come on. Okay. Well, while this charting package thinks, I'm going to go ahead and bring up the daily chart for gold. I did want to show you the weekly chart. Oh. Guys, bear with me one moment. Sorry about this. All right. So a couple of things that we've been looking at gold. I know for those of you who've been in the webinars for the last couple of days, we've been tracking this one very closely, and it's just really amazing. Even for someone who's been trading as long as I have, it's still amazing to see this stuff pan out, guys, like this. A break of a major key resistance. It was the overlap of the 52-week moving average. It's a weekly chart, by the way, and the trend line resistance off the highs we made in 2014. A stretch. Momentum peaks above 60, gets the pullback. Pullback finds support right at former resistance at the confluence again. I mean, textbook. At this point, the pullback is entering an area of which we should be looking for long entries. And at the same time, if it breaks 62, that would invalidate the long side. So you have a very clear-cut stop. You have a very clear-cut threshold of what you're looking to see hold. And here's what the daily chart looks like. So right off the weekly, you know that we should be looking for support sometime soon here. The daily looks like this. Okay. In fact, if you read the weekly forecast on Daily FX, our target was a pullback into 1262, 1268, where we were looking to get long. This is the invalidation level, guys, plain and simple. It's such a beautiful setup because of not only where price is, but momentum. Okay, so we put long targets against this median line parallel, against this 1262 region, stop just below. That's the trade. Okay, as the entry as close as you can in this 5 pip, $5 range. Inevitably, we're looking for a stretch into 1320. I think you get it. The near term, this is the bullish invalidation level. So for those of you trading CFDs, this is where I'm looking for entries. A break below that median line on a closed basis invalidates the long side. I think such a scenario, you risk a pullback as deep as 1237 or even, the former median line off the highs from August of last year. That could be as deep as like 1220. Okay, a little coffin corner here comes in at 1227 if this breaks. But so far, you have momentum trigger here. We want to see momentum hold here and rebound. If it breaks, it's a short trigger. Okay, if it breaks, it's a short trigger. You've broken below a key support in momentum if that moves lower, and you've broken momentum trigger support, and that'll put you in the short side as well. So watch 1268, 1262 as we head into the close today. Above this level, we are looking higher in gold, pure and simple. All right. Now, unfortunately, the dollar didn't quite take a spill as much as we would have wanted to see yesterday on the back of that rather benign FOMC interest rate decision. I mean, we went over it live in the session here, guys. There really wasn't anything that I interpreted as hawkish there. It's interesting because as you come into the office this morning, you hear all these interpretations of how the market or how certain people viewed that FOMC statement. I didn't see anything in there hawkish, guys. In fact, it's a 10-0 count, in fact, in favor of holding rates where they are. We've been getting two or at least one dissenter over the last couple of months. So if anything, for me, I took it as, status quo, a little bit more dovish even, if you will. That being said, market's reaction didn't really say much. So the pullback here in the dollars really would have charged, I think, the gold trade per se. I'm not necessarily saying that just because inverse dollar, guys, because that trade is complete. It doesn't hold any water, guys. Anyone who's talking about gold and dollar being the best inverse trade right now is just simply not looking at the charts. I mean, I don't understand how they can stick with that type of analysis. The gold is up since November. Okay, the dollar index is up since July. So that type of reasoning is not necessarily what I'm looking for. What I'm looking for is this. If the dollar comes off, it's because expectations are that we won't see interest rates move as we expect mid-third quarter 2015. And if that's the case, the bid for gold becomes stronger not just because of a weakening dollar, but because of those inflation concerns of inflation starting to run forward, and typically, historically, gold's main primary function has been an inflationary hedge. So based on that, I think you do see gold start to catch a bid. That's how I'm viewing the gold-dollar relationship. Not so much necessarily inverse right now, but just breaking down the thought process of why someone would want to move their assets into gold. That being said, watch that 1268, 1263, 1262 level in gold. I do continue to favor this being our bullish invalidation level as long as price stays above 1262. Look to buy dips in bullion. Questions on gold? I know it's a mouthful, guys. Chintan saying, using multi-time frames, do you focus on the daily and the 30-minute only, or do you focus on the day, 4-hour, 30-minute? So Chintan, as per my personal outlook on things, the daily is the roadmap. Okay, the daily is the interstate highway that's getting me from New York to LA. The 30-minute is the turn by turn. Okay, once you get in, you get off the highway, you get off the main roads. Here's the turn by turn. Okay, so the daily chart is really the end all for me. This is what's determining my directional bias. This is what's determining the major key levels we're going to deem as support, resistance, bullish, bearish invalidation. The 30-minute is a study of price action and what the near-term levels are, okay? And then when we're actually looking to execute, Chintan, when we're actually looking to press trade, enter trade by trade, that's where the 5-minute comes into play when you're intraday trading. I don't stress the 4-hour or 8-hour as much. I do think that, broadly what you see in the daily chart is the same thing that you're looking at. A 30-minute is what I like to watch and map my levels because I think you do see enough price action, but it's not hidden with, a daily bar, which kind of masks all the intraday price action. So I like to look at a 30-minute. The typical medium-term trader, swing trader, is going to be focused on an hourly and a 240-minute chart, 2-hour chart, or a 4-hour chart. Okay, those are the sweet spots for those. It really depends on the type of analysis you're doing. Okay, I don't want to miss any of these questions, guys, so bear with me. If you posted a question, I will get to it, I promise. DB, I got you. Stefan, I got you. Brian, C, can you please look at Euro Oz turning down into 144.06? If so, where could be an entry? Jamie just mentioned the long entry possibility at 44.06. Sure. Euro Oz looks very interesting, actually. I was looking at this yesterday. Here's what the daily looks like. So I was actually going to put the report on this one yesterday for daily FX, but I decided to default to the Sterling Oz. I think it's a little bit safer. Listen, the opening range here, my problem was it was absolutely massive. So even a stop against the weekly low trying to play the breakout to me didn't make much sense. It's a prime trade. I was actually talking between me and Jamie, just between the two of us. We were talking about this yesterday, and my comment to him, quote unquote, was I think this thing is primed. His comment to me, quote unquote, I agree. And that's pretty much where we left it. I had no idea that we were going to see such rapid Aussie weakness in overnight trade. But listen, it's there, guys. It's there. It was really the break above 43.85, in my personal opinion, that got this thing on the go. Actually mentioned a long possible entry with 44.06. So for me, yeah, 44.06 is pretty much what you'd be looking at. You're looking at the swing highs that we made here. The 618 comes in at 43.85. So if you get a pullback into the former opening range high for the week, I think that's well suited too. You might not get as deep as that 43.85. So 44.06 makes sense. Let me look at this on the near-term chart. I think actually I made a pretty nice scalp on this. Here's Euro Oz. Oh, yeah. Wow. Okay, so it did. Gosh darn it. This was actually a really nice setup. But you can't get them all. Yeah, I mean, the trigger, pretty clear cut. Let me walk you guys through the anatomy of a trigger in opening range here, actually. This would have been an operative trigger for me. Not on the opening range break for the week, but on the Asia Pac opening range. Okay, so here's the Asia Open. You set a high, you set a low. It consolidates and squeezes, but the extremes continue to test 143.13 is the high. That break above was coincided with a break above not only a trendline resistance in momentum, but also an objective break above 60. Okay, that would have gotten you entry somewhere around 43.15. You're looking for 50 pips. Well, that would have been well achieved into the median line or this key resistance range. The break above this key resistance range, which also coincided with the weekly opening range break, was suited with a 70 break in momentum. In and of itself, these are going to be triggers. Okay, so you had ample opportunity actually to try to play the breakout. It's never an easy play, guys. It's never going to be an easy play. You're always going to be better off trying to play a short into resistance, a long into support. A long into a break of resistance is always harder, but when the momentum triggers are there and the broader directional bias is there, it's worth the stab, as long as you have proper risk management. And on this trade, the opening range low for the day would have been the stop. So along here, 43.13 against the Asia Pac opening range low is only 42.70. Okay, it's like a 30 pip stop. You're looking for 52 pips. Anytime that you can increase the risk-reward ratio on a scalp, take it. Take it. I'll risk 30 pips to the downside here for a 50 pip run all day long. Because typically I'm working with 1-to-1. So if I'm not working with, if I can make that ratio better than 1-to-1, those trades are definitely going to be favorable for us. Does that make sense, guys? So on Euro Oz, who is this question for? I'm losing my, it was for Brian, right? I scalped it yesterday off the ML. Right on, man. Right on, Brian. Brian, off of this ML or off of the break of the median line? The lower band or the median line ML? The median line. So this one. Right on. Right on. Yeah, I mean, that was your best entry. The opening range would have been a little bit harder to feel comfortable with just because you knew that key resistance was there, although the key resistance would have achieved the 50 pips you're looking for. So we always want to make sure we're staying objective. But yeah, this was a little bit more of a compelling case in my opinion as well, because this was the first 70 break of the week. Okay? And in fact, you didn't even need to know that. Look back in price action, guys. This is what happened last time we broke 70. Price was trading right around 42, right? After you got above 70, it's still right into 43.80, 43.90. So it still gave you a 200 pip pop, even though momentum doesn't look like price would have traveled much higher, right? So that's why we want to use this, guys. Use it to your benefit. So long story short, for me to get comfortable with a long here, I would need to see an opening range consolidation, give me some sort of stop. I don't have that now because the European opening range is way down here. So I wouldn't necessarily be trying to mess with this here. I would stay constructive above the median line. Near-term support is 44.85, and I would be looking, if you're holding long exposure, I would be looking for that stretch into 46.15, 46.50. Those are a little bit more key targets, especially because the ML, the upper median line parallel, comes into that region over the next few hours. So watch this sort of region right here is what I'd be focused on for Euro Oz. Beautiful play, DB. Nicely done, my man. Nicely done. Any questions left on Euro Oz before we move on? Maybe we'll highlight this setup on Daily FX today. But beautiful play, broadly staying constructive above 143.80, 144 handle. We can. Thanks, I'm learning, but not sleeping much. Brian, I don't blame you, man. Especially if you're in near-term trading, all of these trades I publish are panning out in Asia and Europe. It's really disheartening. Obviously, guys, of all the scalps that I put on the intraday page, I can't be involved in all of them unless I use Brian's strategy here of staying awake 24 hours a day. But use it to your benefit, especially, like I said, especially if you're trading the Asia Euro crossover. I mean, you're getting all the good plays. You're getting all the good plays. Even yesterday's FOMC, you would have offered some sort of positioning for us here, but not much. So use those breaks to your benefits. I hope that offers some clarity on those. Let's jump through. Got a lot more questions to go through here before we wrap things up. So we covered gold. Dale says, why can't trade gold with FXCM in the USA? Can we, Mike? Dale, you can't trade it with FXCM. FCMs are actually prohibited from trading that in the United States. The only way you'd be able to trade gold, Dale, is on the futures markets. Actually, all of my gold trading has been on the futures markets ever since I started. I don't really trade it, or they were all futures trades in general. So that's a regulatory affair, Dale. It's not the option of FXCM. It's not their, it's not up to them. We're prohibited from trading CFDs here in the U.S. because of regulations. So you want that change, write a letter to your congressman. Okay, we looked at gold. I answered Chintan's question on time frames. Chintan says that's what I wanted to focus on, sir, because the more time frames we look on, the more confusing it gets for us. Chintan, I completely agree. I missed that follow-up to your question earlier. I completely agree. Guys, it's always great to take the top-down approach, which is what I do. The daily chart, zoom into a 30-minute chart, execution on the 5. But Chintan's absolutely correct. If you go from a daily to a 4-hour to a 2-hour to a 30-minute to a 5-minute, by the time you get to the 5-minute, you have a daily that's bullish, a 4-hour that's bearish, a 2-hour that's neutral, and a 5-minute that's bullish. What the hell do you do? Right? And that's going to be completely normal, guys. That's not something that you're doing wrong, Chintan. That's just what happens from excessive information being digested, okay? Focus on what your trade plan is. The only reason I look at the daily chart because that's what the broader picture is. If I don't know what's going on in the daily, I'm sure as hell not scalping it. The 30 minutes telling me what's going on right now. The daily chart could be bearish, but on a 30-minute, it could be opportunity for a nice long position intraday, right? So we want to make sure we're always keeping that in mind. And if you do look at too many time frames, you're absolutely going to get conflicting signals across the board. Across the board. So, only want to look at what's pertinent to your style trading. Okay? And for my style trading right now, 4-hour chart's not really going to do it for me. So I don't need to look at it. Okay? Try to digest only the information you need, guys. You can keep looking at charts till next year, and you'll just completely confuse yourself, and you'll have so many conflicting signals that you won't end up doing anything. So just keep that in mind. If we want to run the US and UK FXCM trading station, do I need to download software ×2? How do I set it up because I want to see the CAC, the FTSE, etc.? The web version does not save the setups. Thanks. Yeah, so Brian, you can open up a demo account, or even if you open up a real account if you have an offshore address, you don't need to install new software. It's the same trading station. It's just when you log in with those credentials, it'll allow you to see those assets. So Brian, does that help? You just open another instance of it with the other credentials, and you'll be able to see all those CFDs on there. So I hope that helps answer that question there, Brian. Eileen, I think you've asked this question before. I want to make sure I get this right this time. She says, how do you know how deep to watch for pullbacks after entering, especially trading the extremes that seem to have not much pullback, but continue with seemingly good trades on short term? How do you know how deep to watch for the pullbacks before entering? Eileen, the same way you look at to enter any trade. It's nothing different. It's nothing different. I need to see. I don't know how deep the pullback's going to get, but I do know what I'm looking for. I'm looking for a momentum trigger, for a bullish break if I'm looking to play the long side. I'm looking for maybe an opening range break. Okay, if the opening range for U.S. maybe pans out above this region, right, and the opening range for the U.S. breaks to the downside, then I'm looking lower. What would make me get back on the long side? Same thing. Maybe towards the end of the U.S. trade, it stretches here, and momentum gives you a nice drop, a nice trigger break again to take the long, right? It's the same process repeated. Wash and rinse and repeat, Eileen. Nothing changes. Now, it's harder on these breakouts, on these massive range trades where a quarter of daily TR is 50 pips. I don't blame you. It's hard to try to get an entry on this if you miss the breakout. Yeah, the pullbacks are likely to be shallow. You know what that means, Eileen? It just means we don't trade it. That's it. I don't know how far it's going to pull back. No one knows that. All you look for is the same type of triggers that put us into the trade originally. So on a trade like this, yeah, it sucks. I didn't get a chance to jump in. You know, it was right dead in the middle of the night here. I value my beauty sleep, so I didn't get a chance at 3 a.m. to jump into a long. I missed it. No big deal, Eileen. The market will always provide more opportunities. Trying to chase a missed opportunity is just blinding you to the next one. Okay, guys? So if you miss the entry, if you miss the trigger, it's fine. The market will offer more opportunities. Of that, you can be sure. All right, Eileen? So I hope that offers some perspective, I guess, on that. How do I switch between profiles? Do I have to log off? No, Brian, you don't. It seems like you have a lot of software questions, Brian. I definitely recommend for you to go through there's a video that FXM offers on a walk through the platform, but you don't need to switch anything. You do it right on your charts. Layouts, this is where you open the different layouts of the chart analysis that you've saved. For profiles, you do need to go on the actual trading station here. You go to System or View, Profiles, and then this will actually save the color schemes, your indicators, etc., etc. So I hope that helps on that, Brian. Eileen saying, I have asked, I need the answer to sink in more. It means you stay out. Okay, yes, I hate missing so many runs and chasing is still getting rid of. Wow, my English is a bit twisted. Sorry. Eileen, I read the questions as I'm reading them. I read them out loud, so don't worry about it. S&P near support. Jay, let's take a quick look at the SPX. Yeah, so there's a couple of different supports I would be looking at. Obviously, I have the basic trendline support off the December low, which still has a little room to go. I looked at this yesterday. I don't know why I didn't say it. But anyway, you have the 200-day moving average, which will be right along those levels as well. The operative pitchfork that we were working with, which actually caught the exact low early in the year, I'm starting to lose confidence in the efficacy here just because of what we're seeing. But on its face value, before I say that, on its face value, it's a big break of resistance, and you're coming back and checking its support. That's all it is right now. Yeah, I'm not really going to make any alterations to this or a trade call on this. As a disclaimer for everyone in the room, I don't scalp the equity indices. The only trades I've made on this in my career have been on the futures desk, and it's been more swing in nature than necessarily scalp. So just keep that in mind. I'll offer you scalp levels if you want them, but I don't, scalp the indices. If anything, I'll scalp the commodity market all day long. But for the SPOOs, for the German 30, which actually we put together a chart on this one here in the room last week, which has continued to pan out. I showed you guys this yesterday. Just turning over ahead of our target. So this is another one where the scalp levels have been very, well suited, but they're not scalp in nature in that, this move to this move may take, more than a day. This actually took a 2-day move here. So, use these levels for what they're worth, guys, for your own personal trading, but just keep in mind that, I personally don't really scalp the equity indices too much. But these levels that we've been looking at for the German 30 have been working out pretty well. All right, so again, if you ever need to, guys, there's a camera button here in the GoToWebinar meeting. You can always take a picture or snapshot of any of the charts that you see us review here in the room. The technicals have actually been very clear. Here's a trigger break to the upside with a move above that 618 extension. On the way down, support, former trigger resistance, now support. So you're still holding above 50. You don't want to necessarily turn the trade over completely yet. You're still above that median line. At the end of the day, it's this that'll put me back on the bearish camp for the DAX. That's 10,550 here to the downside. I'm not dodging your question, by the way, Jay. I'm going to go back to the SPX, and I'm going to take a shorter time frame here to take a look at it for you. But I just wanted to warn you, that it's not really something that I intraday trade too often myself. Okay, so guys, ignore all the lines for just a minute, okay, and just peep this with me. Since the open of 2015, in my mind, in the SPX, with all of the volatility that we've seen, with all of the chop that we've seen, with the 1% gains and the 1% losses, it's just set its monthly and yearly opening range. I know you guys may not like to hear stuff like that because it doesn't really give you a directional bias, but that's the way I trade. So for right now, I'm watching the highs or the open of the year is what you want to watch at 2073, and I'm watching 1988, 1990. I'm not going to necessarily stress that drop there because we've seen pretty strong rebounds around this anyway. And that's not only your January opening range, but essentially the 2015 opening range so far. And these are how I derive bias. So you can work with this on a day-to-day opening range strategy, which works just fine. But for me, I think the broader directional bias here is still unknown. You're still kind of neutral since the start of the year. Here's the 2015 open. okay? And that's what I'd be focused on. I really don't have any plays on this until we clear that range. I'm more so inclined to favor a downside break, and there's a couple of reasons for that, Jay Jackson. He says, I'm thinking, or I think if the S&P breaks support, dollar yen will follow. They have had a great correlation. If you saw the week of the chart, or the chart of the week that Jamie posted a few weeks back, a very strong case can be made. Absolutely, yeah. But here's the one thing I want to note. There is, it looks like to me a change in behavior in the momentum signature for the SPX. All through 2014, you did have a couple of dribbles below 40, but it's been pretty much a 60 break type of game where the market sits still while below 60 break you want to buy. The market sits still, or you see that quick dip below 60, but as soon as you see the 60 break, you want to rip it. Here's the last rip above 60. Ever since then, since that peak, you had some serious divergence into that high we made last year. Serious divergence, right? The closer that these reference points are to 50 are typically the stronger the signal. Serious divergence into that. And then on every pullback, the 40 hold doesn't want to make you turn over the broader bias yet, but here we are turning over well ahead of 60 this time, right? And if we turn over ahead of 60, ahead of 50 next time, you know that the broader topside bias is waning. That being said, I do think you are coming into support. You're absolutely right. For me, the support target I'll be stressing will be really this 1980 level, 1990 level, more so than necessarily this trendline support. Long story short, this is what would invalidate the upside bias near term. Okay? This would necessitate a break of the median line. It will necessitate a break of this trend line. It will necessitate a break of the 52-week moving average, and it would necessitate a break of the yearly opening range low. So the broader upside trade, this is what would invalidate it for me. As long as this is in play, you really look to buy pullbacks. You know, I do think we're putting in a top, but until we do see a material shift in the broader bias, I don't want to be the one trying to short the equity markets yet. Jay, does that help? Does that offer some clarity, man? Again, feel free to take a snapshot of the chart here, you know, if you need it. But those are the levels I'd be respecting. And although the daily chart has swung through this 20-30 level multiple times, intraday, actually, guys, it's actually been a pretty decent pivot. So I leave it on there on that front. Eileen says, glad you read the question out loud. Everyone else's questions are so valuable, and not just the answers, but what they asked. Have always been appreciative. You do this always. Eileen, I appreciate that, your comments. And again, it's really for your benefit, guys, because a lot of the questions you have, there's probably someone else out there with the same exact question. And your questions also help me sort of identify where you guys are at with the strategy and what I need to focus on really, you know, driving home the message. So Brian says, I don't see the camera. I'm running this on a Mac. I can't really help you there, buddy. I don't know what it looks like on a Mac. I can honestly say I've never actually seen it on a Mac. But with that, guys, I'm going to head and wrap it up. We are well over the time threshold. If you have any questions or trade setups that you want me to review, feel free to throw it out right now, guys, real quick. I'll be more than happy to bring it up on the screen for you. A special thank to you, Eileen, for asking all those 5-minute chart questions. Cheers, Pooja. I appreciate that. Eileen says, thanks for your help today. Have a great end of your week. Same to you. Camera goes if you maximize the window. Alex New is telling you there, Brian. So try maximizing the window, man. I think you'll see it there. Jay Jackson says, on a Mac, Command-Shift-3 takes the picture. Jay, thanks for sharing that. So Brian, Command-Shift-3 takes the picture of the screen for any of the charts that you'd like to have during the session. All right, guys, we'll wrap it up there. Thanks again for everything. I will see you guys bright and early on Tuesday for the next Scalp webinar at 8:30 Eastern. We'll keep you updated on SB Squawk and, as always, on the intraday page for the scalps. Take it easy. Guys, GDP tomorrow is likely to be big. I'll be on the SB Squawk lighting that up with the information as it's disseminated. But use some caution if you're looking at any dollar exposure heading into that release. Best of luck trading. We'll see you tomorrow. Cheers.